We see that expectations for China are still very high, extremely high, and maybe a bit too high compared to what is taking place in the rest of the world. Here we have compiled some figures for the latest industrial production change, 12-month changes, that's the first column, and then estimates of economic growth last year, and expectations from a panel of economists reporting to the publication The Economist. And you see that for the US, for the euro area and Japan, it's hovering around 1.5% growth. And with China, 9 to 10%, well, 1/3 of the Chinese GDP is exported. And a very high share is also investments, and that is very much for infrastructure. And only 1/3 is for domestic consumption. So a lot of the infrastructure investment will be to invest in factories and infrastructure to handle production for exports later on. So some economists, including myself, we think that there is some inconsistency in these scenarios. Raw material prices are high, and we see that wheat has increased more relatively than oil and also steel recently. And this is well known, so I will not use our valuable time for that. When we look at the freight market, these are indices here, then we see that it's at a very high level. We see volatility. And since this was presented, the Cape size in the course of the last 3 working days, I looked this up this morning, is up by 11%, and the other sizes shown here up by 6%. So in the short term, at least, there seems to be a good balance. And that is very much in line with Mr. D.Y. Goel said this morning. It's for 2010 and also maybe even in 2009, but definitely in 2010, that there is more concern on the ship owner side and should also be on the shipbuilders side. But for the cargo owners, the tonnage balance is definitely soon going to tilt. This is showing freight rates in opposite directions from the Atlantic to the Pacific. That is the continent to the Far East, the red, and the green is in the opposite direction. And normally, there has been much more cargo coming into the Pacific. And before the crisis in Asia, you can see that rates for handy-sized vessels, which we have shown here, were twice as high. And then suddenly, during the crisis, they didn't use so much steel or cement, and the value of the currency dropped by 50% in Korea, not so much in Japan, and in some other countries even more. So Asia, in a way, exported itself out of the crisis pretty soon. You don't switch off Asia. You take a breather, but there's such a strong momentum, and especially in the last few years, with 3-4 billion people experiencing this phenomenal economic takeoff. The world has never seen anything like it. Recently, we have seen a very strong steel export boom, and we could also see that rates to the Atlantic increased very much, but a strong adjustment because now steel exports from China is dropping rapidly, and we'll later see why that is taking place. When we look at dry bulk shipping, and we stick with a fairly small vessel for an illustration, we can see the 1-year time charter rate in red. And then the green curve is showing on a different scale the new building price. It has come up quite a bit, but not nearly as much as the 1-year time charter rate. But take a look at the second-hand value. Now the 5-year-old ship is valued much more than a new building. And even a 15-year-old vessel is at the same level as the new building price. Why? They are here and now in a very strong market. The new building will be delivered in 3 years' time, and we don't know what the market will look like then. Well, we may have some idea about the direction. So, the value of being spot in a hot market is very well reflected here. And this has tempted owners to order, in my view, far too many vessels, and we will look closer at that later. When we look at seaborne trade volumes, coal is definitely the big winner. And that is partly because of the high oil prices. It's also primarily, well, will be at least, we have seen China becoming a net importer in recent months. And I think that is the biggest upside in dry bulk in the years to come, coal imports to China. But we see now that iron ore seaborne trade is at the same level and may probably grow even faster in the next couple of years, but then gradually we'll see more scrap-based steel production, recirculation, and we will illustrate how far they have come in that respect in the US and how the situation is in different countries. But recirculation will dampen the use of primary raw material. Grain was a disappointment for a couple of decades after doubling during the 70s. I think if we include now soybean meal, I think soybeans have already been included for statistical reasons here. But then the volumes are quite substantial, and in view of global warming, which maybe has taken a break in the US this winter, and also in my country, Norway, where there is 1.70 meters of snow at my cabin, and still some snow around the capital. Well, if it's getting warmer where it's already warm, and wetter where it's already wet, then maybe we need to cultivate the pampas and other places in a much more intensive way, and then we need more fertilizer and raw material to make fertilizer. So global warming probably will increase demand for tonnage related to grain trade. And even more so on the construction side. We need a lot of steel and cement to repair after hurricanes and floodings. And we also need to build dikes in many countries. And if the sea level is going to increase 0.5 meter or more, city planning will be revised. And the opera that we just opened in Norway 2 weeks ago would definitely have been lifted at least 1 or 2 meters above sea level. So you see, on the dry bulk side, I see almost only upside potential for tonnage demand because of global warming. On the energy side, of course, maybe you need a little more for air conditioning in some places, but definitely less for heating. And with the high energy prices, we'll see more creativeness and more combination of different types of energy, conservation. And in the OECD countries, that is North America, Europe, Japan, Korea, Australia, industrialized countries, we don't use more oil than 30 years ago. Industrial output is more than double, which means that the oil intensity is reduced by more than 50%. And by the way, we don't use much more steel either in those countries. So we benefit very much from the powerhouse in this part of the world in international shipping these days. If we look at shipments by size, this is from a fairly recent analysis that I have done, then we see that Capesize, the two largest here, is serving basically the steel industry, but also to some extent thermal power plants, 80 to 200 and 200 plus. And then you see a little blue slice on top, and that is salt from useless loop, they call it. It's not so useless anymore in northern Australia into Japan and Korea, and from the west coast of Mexico. And now and then, when the steel market is slack, and that's quite a few years back, then we see that they're pooling Panamax cargoes of grain into Capesize in order to benefit from economy of scale. So it's not very often.